Good morning, everyone. My name is Jim Rosner. I'm president of the European American Chamber of Commerce and managing partner of the New York office of Pepper Hamilton, and I welcome you all today. I want to thank our friends at Thomson Reuters for our collaboration in bringing you this event. And without further ado, I'm going to turn it over to Rob to introduce the Vice President, who's, you know, when you think about how hard your job is in the morning and you look at the piles of paper on your desk and you say, wow, I got a hard job, and then you think about all the things that befront a central bank like the European Central Bank. I applaud your efforts. So without further ado, I'll turn it over.
Thank you, sir. Thanks. Good morning, everybody. I'm really excited about this for a couple reasons. I have moved to Paris and have been trying to figure out the intricacies of European Parliament, administration, and it's certainly very interesting. In fact, as we were preparing the text or the description of this event, we stumbled over part of the text. So we had initially written, at the end of May, voters from 27 nations will head to the polls to elect a new European Parliament. But then, at that time, Britain was supposed to be leaving the European Union at the end of March. So then they didn't. They still might, but it wasn't clear at the time whether they were going to be, Britons would be voting in the European Parliament elections. So in the end, we opted for, quote, voters from Aalborg to Zagreb will elect a new European Parliament. That seemed to be, A to Z, you guys get that. I think Aalborg is somewhere in Denmark, Zagreb in Croatia. But I share this anecdote because I think it highlights the difficulties, or some of the difficulties, Europe is grappling with. Brexit is just one of the challenges, but there are many more. You've got US-European trade ructions, a potential slowdown in the German economy, the Gilets jaunes in France, who I get to see every Saturday, the anti-establishment movements in places, well, particularly in Italy, still questions about immigration, an election in Spain this weekend. And in fact, just yesterday, I think Scotland said that it was going to push for a second referendum on remaining part of Great Britain. So I'm delighted to have Luis de Guindos with us to help untangle some of these difficult issues. Luis has been vice president of the European Central Bank since June 2018. I think we first met when you were in Madrid, when you were the Minister of Economy, Industry and Competitiveness in Madrid for the Spanish government. Before that, I think you had a pretty long career in finance and business, among other places, PwC, the IE Business School in Madrid, Lehman Brothers, Nomura, where I think you were the chief executive of Iberia. So this is great. Thank you for coming. Let's start with a really simple question. Okay, from 1 to 10, how optimistic are you about the European economy over the next year, with 10 being super optimistic?
Well, you cannot be super optimistic, and that's for sure. Well, the European economy is living now in a very concrete and specific juncture. In the first half of this year, in the first half of 2019, we are going to have a growth rate that is going to be very similar to the second half of 2018. So growth is going to be, let's say, weak. It's going to be in the area of 0.1, 0.2 quarter on quarter. And our projections is that we will have, a rebound in the second half of the year. Why? Well, I think that there are several factors behind that. First, because we expect that some of the, forces that were behind the deceleration that we started to experience, in 2018 will start to fade away. For instance, we expect that eventually the Brexit issue will be finally settled. Afterwards, because we expect that trade disputes will not evolve and will not, transform into a full-fledged trade war. And finally, because if you look at the evolution of the European economy, well, the financial conditions are very easy. The evolution of the labor market is positive. Consumers, are in a much better mood than they were only 2 years ago. And so there are factors that we expect that in the second half of the year, we will have a rebound of the European economy. And so the growth rate on average will be in the area of 1.1, 1.2%. That's our central scenario, the baseline scenario.
It sounds like a 7 to me.
But I think that it's important to try to analyze, the factors behind the deceleration of the European economy. Well, we have Brexit, that I suppose that we will elaborate a little bit more on Brexit afterwards. We have trade tensions, that I suppose as well that we are going to deal with trade tensions, because I think that is something that has had an important impact on the evolution of the global economy. And there are some idiosyncratic factors in Europe. The situation of Italy, the problems that they had with fiscal policy, despite the fact that finally they arrived to an agreement with the European Commission. But Italy, it has a difficult situation, as you know, in terms of growth, because the real problem of Italy is growth. It's not only the public deficit. The public deficit is going to be 2.4%, but the level of public debt is huge. As you know, it's around 130% of GDP. We have had also some idiosyncratic factors in Germany with the auto industry, as you know perfectly. And these are the factors that are behind the deceleration of the European economy.
So let's drill down into some of those issues. Do you think? I mean, I don't want to spend too much time on Brexit. I feel like there's been a lot of brain damage trying to figure out Brexit around the world. But is there a chance that actually Brexit doesn't happen? Do you think that's a scenario that you sort of?
I don't know. I don't know. But nobody knows now. As you know, well, we have postponed, the deadline until the end of October. It's going to be complicated because, as you have said, we have European elections at the end of May, and hopefully, we expect that perhaps they will be able to reach a deal in Westminster before the date of the European election,
which is next month, end of next month.
Yes.
I think. I mean, given their propensity to miss deadlines, I would think that's optimistic. And it'll be quite interesting then, because it becomes a bit of a referendum, at least in the British side, on remaining in the EU. One could make the case.
Well, I think that no Brexit would be, the best solution. If you want my personal opinion, I think that Brexit is a lose-lose situation, especially for the UK. I think that is going to be detrimental to everybody, but especially for the British people. But I don't know what is going to happen at the end of the day. They had a referendum. I think that to have a second referendum, it's not easy on political grounds. And I think that the divide, among the different political parties is huge now. Yeah. It's not as much, that you have Tories or you have Labour. Is that inside Tories or inside Labour you have different.
Italy is interesting. So Italy, as you say, growth is the problem. The government there in Rome has kind of acknowledged that they're not getting the growth they expected. We're going to have, I think, 2.4% deficit to GDP, which is above the 2% they agreed to. When do you think the bond market is going to start to exact a toll on Italy's fiscal profligacy?
Well, I hope that in the case of Italy, they will start to implement the correct measures, and the correct measures are those that have to do with structural reform, with supply-side economics. I think that Italy has a problem of growth. That's the real problem, for sure. That because the public debt ratio is not very high, 2.4. Sure. Is it's acceptable. It's below the threshold of 3%. But simultaneously, you have a public debt ratio that is above 130%, and that's a real problem. So I hope that the Italian government will start to implement the measures.
Hope. With this Italian government has not been very keen to do things that Brussels might suggest. I mean, are you? We have one of my colleagues has written a view that she argues that this summer we may see another increase in the spread against German bonds and a real crisis along the lines of what we saw in 2011.
But for instance, there is something that I think that is an important, if you allow me comparison. Well, I have a certain positive bias with respect to Spain. Spain, in 2013 started to grow, and now is outperforming the majority of the European peers. Why? Because it implemented, important structural reforms, and simultaneously because, we restructured, our banking industry.
Yeah.
So these are the kind of reforms that at the end of the day start to pay. Fiscal policy cannot be a solution for a country with a 130% public debt ratio. So, what I would recommend, to the Italian government is, to start to pursue this kind of supply side reforms, because I think that the potential of Italy is there.
Yeah, well, we'll see about that. What Speaking of Spain, you've got an election coming up this weekend, and it looks like it could lead to a hung parliament. And what's your prognosis for?
Well, I don't know. I think that is a very, completely new situation, because we have 5 parties. We have something that, is totally new in the Spanish political landscape. That is, let's say, a radical rightist party, that is Vox. That didn't exist in Spain in the past. So there are a lot of question marks and unknowns.
Recent past. In the recent past.
In the recent past. Well, 45 years ago.
Yeah, exactly.
45 years ago. The point is that for sure that we are going to have more fragmentation in the parliament, and for sure that we will, in the case of Spain, Spain will need a coalition government. That's something that is totally new in Spanish politics.
I mean, one of the interesting things, if you look at the polls in Spain, among the youth, there seems to be quite a bit of support for the idea of Catalan independence versus the older folks. And as you say, the Vox party, the folks on the right, it's not an anti-immigration movement. It's about creating, one Spain, and very strong against the idea of secession. But if the younger folks, do you think that's a tenable case for Spain, given what we see in Scotland and the yearning for independence around the world?
No, well, in the case of Spain, I think that the independence of Catalonia is a total nonsense. Catalonia has been part of Spain since the incorporation of Spain 5 centuries ago. It's a very rich region, has a lot of autonomy, and more than 50% of the Catalan people is against independence, and I think that that's important. I think that is also quite relevant to maintain the dialogue with the Catalan authorities, and for sure that at the end of the day, before exploring all the alternatives, we will find out the correct one for Catalonia. That is that Catalonia will continue being part of Spain.
It's interesting that economic issues haven't been at the forefront of the campaign in Spain. And I remember, again, when your government, you were there, financial crisis. You were there pulling. That's all you did was focus on that for the most part. It was a fire you were trying to put out. Is that because everything's hunky-dory, everything's fine in the Spanish economy, or is it?
Well, the Spanish economy is doing well. We have, in the case of Spain, the deceleration of the economy has been more limited than in the case of the rest of Europe. Spain is going to grow slightly above 2% this year, in comparison with 1% in the case of the euro area. Employment, despite the fact that we have a very high unemployment rate, employment creation is quite rapid, and so far so good.
And Germany, let's turn to you mentioned the auto business. It's interesting when I spend a bit of time talking to people about the German economy, people say, oh, the auto industry is having which is the real driver of the industrial heartland of Germany and parts of Italy, and the whole feeding into that whole supply chain. And people say it'll get better. It's going through a rough patch. Is it going to, though? How worried should we be about the secular change? The electrification of vehicles, the phasing out of diesel, the autonomous driving, in just the fact that, I don't know, people like my kids' age are like, why would you own a car? How do you guys diagnose Germany's issue?
Well, I think that in the case of Germany, we have to bear in mind that Germany is the most exposed economy to world trade, and we have seen an important drop in world trade over the last 18 months, and for sure that this has had an impact on the German economy, and I think that this is the factor, especially the situation in Asia, the situation in China. Right. That's one element that we have to bear in mind, because for instance the auto industry is very important as well in the case of Spain, in the case of Italy, in the case of France, in the case of Portugal, in the Czech Republic, in many areas of Europe. I think that the main factor behind the deceleration of the German economy has to do with the situation of the evolution of world trade. I think that it has been, quite relevant. Besides, I think that the situation of Germany is quite positive in terms of confronting and facing up to a deceleration of the German economy. They have a fiscal surplus. The public debt ratio is below 60%. Well, they have full employment. The unemployment rate is hovering around 4%. So they have fiscal space to face up to a deceleration of the German economy.
Yes, they do, but they don't seem to want to access that fiscal. I mean,
Well,
this is one of the great arguments that you hear around Europe is the, not just Germany, I mean, you could say the Netherlands and some other countries that have these fiscal surpluses and don't want to spend them.
But there is something that is important, and I think that is important if I refer to the fiscal situation in the euro area. Well, the fiscal deficit, the aggregated fiscal deficit in the euro area now is 0.5%. That compares with 5% in the case of the States.
Yep.
And the public debt ratio, is declining. It's now hovering around 80%. So in Europe, there are fiscal space, on average. Afterwards, you have to look at the dispersion. And there are some countries that have much more. Well, in the case of Italy, they do not have fiscal space, for sure. Or even in the case of Spain, in Spain, the public debt ratio is close to 100%. But there are other countries that they have fiscal space. And on consolidated basis, on aggregated basis, as I have told you, I think that in Europe, a fiscal policy can play a role. Not only in terms of expanding and implementing fiscal stimuli, but as well in terms of the quality of the public finances. I think that that's quite relevant.
And France, the other big economy, you've seen the difficulties that President Macron has faced in trying to bring forward reforms. He was elected, with the promise of a slightly more liberal in the European context, more market-friendly economic reforms. He has been stuck, really since at the end of last year with the Gilets jaunes. Tonight he's coming out and giving a speech in which he'll have some offers on to reforming the economy, but even these may be more to try to keep the Gilets jaunes from overwhelming the Champs-Élysées on the Saturday afternoon. How concerned are you about the Macron's inability to push forward a reform agenda?
I think that first of all, the demonstrations of the Gilets jaunes, have started to decline. They have not, the strength that they had.
That's true.
3 months ago, 4 months ago. So I think that the approach implemented by the French government has been the correct one. Has been to listen to the people. You have to listen to the people. That part of
And he certainly did that. I
yes,
mean, he
yes,
went across
yes,
the country
yes,
for
yes,
3
yes,
months.
yes. And so I think that has been very important when you have a situation of discouragement in the population. You have to look at and you have to listen to the population. And I think that in the case of the French government and the President Macron, they have been doing that. And simultaneously, I think that they have a, let's say, pro-market agenda that has not been the main driver of the, let's say, the discouragement, the upset of the population. And really, when you look at, because it's curious this movement of the Gilets jaunes, because the level of equality in the French society is one of the highest all over Europe and all over the world. I think that it has to do with other factors, but I am sure that the French government will be able to address them.
Well, one of the ideas is to get rid of the École Nationale d'Administration.
Well, that depends, no, because I think that the problem is not as far, to have, this kind of, let's say, elitist, instrument to prepare and to educate your leaders. Is that, the important thing is that everybody should have, the capacity to have access to l'ENA.
L'ENA, The anarchs are everywhere. It's quite fascinating.
Well, but again, the question is not, the question of having, because I have a lot of French friends, and they have gone to l'ENA, and they have a very good preparation. The question is that you should permit that, all the social base should have access.
Well, it's quite democratic. I mean, it is meritocratic. It's hard to, it's not like getting into USC in California. But no offense to USC. But okay, let's go to the European Parliament election. Now, this is a thing that I think a little bit like Brexit hurts everyone's brain. If
we're talking much more about politics.
Well, we'll get to money. Don't you worry. But European Parliament is. And I'm getting to that right now, in fact, because the European parliamentary elections are at the end of next month. There is a real, the composition of the European Commission and the Council will be determined by the results of that to a degree. And so will the composition of the European Central Bank. So, to a degree, again. I mean, okay, this horse trading is hard to understand, I think, even if you're in Europe. But what are the chances that sort of populist, anti-European, European Eurosceptic parties take a very large chunk of the parliamentary election? What does that mean? I mean, how should we, outside of Europe, trying to understand this, how should we perceive that risk?
Well, I think that you are totally right in something that I think that is quite pervasive all over Europe, is that we have much more, let's say, fragmentation in politics. That's happening. We have referred to Italy, to Spain, even to Germany, all over Europe. Even in Finland, well, they had elections 1 month ago, more or less.
Complete surprise there.
Yes, it was. Fragmentation was there. No party obtained more than 20% of the total vote. That's a reality. In Europe. So, well, for sure that. In the European elections, we are going to have more fragmentation. But if you look at the polls, the Popular Party is going to be the biggest party. Afterwards, you will have the Social Democrats. Afterwards, you will have the Liberals. Afterwards, you will have perhaps the populist. But populism in Europe is polyedric, if you allow me to say. You have populists of different nature, and but populists will be very close to the Greens. But if you put together the Popular Party plus the Social Democrats plus the Liberals that are pro-European, they are pro-integration, for sure that they will.
So they can command a majority.
Yes, they will have a majority.
And but will that make it more difficult in terms of the composition of the Commission? I mean, will it make it more?
Well, it will be more complicated, but the decision-making process in Europe is always much more complicated. I understand perfectly that here in the States, you have difficulties to understand it. First of all,
yeah, because it works so well here.
Yes. Well, but at least it's much more homogeneous. No, you do not have 28 governments and different states.
Well, we got 50 states. And
but they are not comparable. They are not comparable to the situation in Europe. But finally, in the case of Europe, for sure that we will reach a consensus. We will strike an agreement, and for sure that we will be able to appoint a new commission, a new head of the council. And for sure, the head of the
which brings us then to the
European Central Bank.
So Mario Draghi will be finishing up at the end of that.
Yes.
Who's going to replace him again?
I don't know. I have no idea. Perhaps you can illustrate to me who is going to be. But I do not have any idea. It's up to the politicians.
Can you put your name in?
No, not at all.
I mean, it's quite funny because you do hear it all depends a little bit on do the Germans get this or the Dutch get that. The name that came up to someone gave me the other day was with a sort of conspiratorial whisper was Christine Lagarde.
I don't know. Christine Lagarde is
it
has been a great managing director of the IMF, a very good finance minister in France. But I do not know. I have no idea.
Okay. Well, I mean, but whoever gets that job, it's not going to be. I mean, as Jim was saying before, it's not an easy job. It's even more difficult, one could argue, because even though, notwithstanding your rating of 7, my interpretation of your rating of a 7 for the European economy, if the economy does do something else, and we look at a decline or a downturn, you're at zero. You know, there's not like a really easy interest rate kind of toggle to use. You know, we're very far from normalized interest rates in the Eurozone. What tools would the successor to Mario and you have to try to rectify or help?
Well, I think that there are a wide range of potential instruments. For instance, over the last 2-3 months, we have come out with reinvestment policy of the the securities maturing in our balance sheet. Afterwards, forward guidance of interest rates. Afterwards, we are going to launch a new round of long-term financing, what we call TLTRO number 3. So we have instruments, and for instance, we closed our QE program at the end of last year. But just in case, as President Draghi has indicated in the past, it's something that we can use again if needed, if we see that our mandate is not going to be accomplished. Our mandate is to price stability, and price stability defined as below but close to 2%. So I think that we have instruments. But let me say something, because I think that this is relevant. We have instruments at our disposal, and the Governing Council is open to use these instruments. But there is something that I think that is relevant, is monetary policy is not almighty. Monetary policy cannot be, the only policy in place. And I think that this is quite important. This is a message that has to be understood, especially by governments, by politicians all over Europe, because we need to have a much better fiscal policy, much better quality of public finances, and simultaneously, to implement the structural reforms, because in the case of, of some countries that are lagging behind the average in terms of economic performance, the reason behind, that underperformance is that, they have not implemented the structural reforms.
I mean, this is a big question, not just for Europe. I mean, this is obviously a case in the United States. And the more that the Fed is perceived to be the only game in town, yes, and the central bankers being unelected, the more the independence of the institution becomes problematic, or she becomes a target. Are you worried about independence? I mean, it's quite a little bit different in Europe than it is here, where the president has attacked, or has criticized, I should say, Jay Powell, suggesting that he should be softer with his money.
But I think that is important to remember. Sometimes you have to go back to basics, and to remember what are the main factors behind central bank independence. I think that first of all, the main reason why is because you have a mandate. You have a mandate. That mandate has been, let's say, chosen by the politicians, or set by the politicians. In the case of the European central banks, is price stability. In the case of the Fed, it's a little bit more complicated, because it's both
employment,
price stability, and economic activity. But in our case, it's very clear. The politicians set the rules, and afterwards they give independence in order to arrive to this, and to meet this mandate. And I think that that's the main reason behind central bank independence. I know perfectly that now we are living in a world of very low inflation, and high inflation was the main enemy of central banks.
Right,
but perhaps in 2-3 years' time, inflation will be back. Who knows?
Yeah.
You have, for instance, you look at the track record in terms of inflation. Well, the 60s were more or less okay. The 70s we had high inflation, and that was the time of that different governments, push in favor of central bank independence. And for sure that high inflation will come back. If we make mistakes, for sure that it will come back.
You see, I mean, there's not a lot of evidence of that, though, in Europe.
Well, but if you look at market expectations, indicate that in the case of Europe, for instance, in 5 years, our average inflation rate will be in the area of 1.5%. But when you have these long-term inflation expectations, they are extremely affected and influenced by short-term events. So if short-term inflation starts to go up, for sure that long-term inflation expectations will be affected.
Before we get to questions, we got to talk about banks. So this morning, Deutsche Bank and Commerzbank called off their merger talks. It raises questions not just about the creation of national champions or consolidations internally, but I think there could be this could be the moment also where a cross-border consolidation takes place, especially if Commerzbank is now in play. What is your view on consolidation of the banking system in Europe?
Well, beyond this concrete, trade, this potential merger between Commerzbank and Deutsche Bank, that we have nothing to say on that. I think that consolidation.
Because you guys thought it was a great deal.
No. We have nothing to say on that. We were not. we were not in favor or against. This kind of. It was a decision taken by two private banks. And the supervisor respects this kind of decisions, and the only thing that the supervisor has to do is to control that the solvency, the liquidity, and the business plan of the different banks are the correct ones.
But it certainly did seem to have a fair amount of political.
Well, but that's different.
Support.
We are talking. We have talked before about central bank independence. So we have nothing to do with this kind of mergers. But coming back to the general issue, that is consolidation. I think that consolidation in Europe is going to be needed, and it's going to be needed because we have an excess capacity. And if you look at the profitability of the European banks, is very low. Even if you look at the price-to-book ratio of the European banks, is clearly below. The American banks, is something around 0.55, with a lot of dispersion around this average. Whereas in the case of the American banks, as is clearly above 1. So that's an indication that the return on equity of the European banks, on average, is below the cost of equity.
I mean, it is actually rational if you're making a 5% return on equity. There's no reason you should be trading it at 10.
No, that's
at one times book. You should be trading it
below 1 time book.
But if you talk to some of the banks, and in fact some of them have put this out in their earnings statements, they sort of say, oh, well, gosh, we were really expecting the European Central Bank to raise interest rates, so we'd start to make that spread again.
No, but that's not, the reason of, the low profitability of the European banks. The low profitability of the European banks has to do with structural factors. For instance, excess capacity.
Too many banks.
Yes, too many banks. It's overcrowded. The banking landscape in Europe. If you look at, for instance, cost efficiency, the cost to income is around 66. Yeah. So, that's not the situation in other parts of the world. So they have to make a wholehearted effort in order to improve this kind of situations that really are hampering and impairing the profitability of the banks. And you have something that I think that is quite relevant is the legacy assets. Legacy assets, despite the fact that the European banks have reduced the non-performing loan ratio quite a lot, from 8% to 4%. Well, it's something that they have to continue doing an effort. So with respect to consolidation could be an instrument in order to get rid of this excess capacity, and in that regard is positive, but simultaneously cross-border consolidation, I think that is very important, because one of the main targets of the Eurozone is to create a banking union. You have a single monetary policy, you have a single supervisory entity, you have a single resolution fund, but you need simultaneously to have a common insurance deposit scheme, what we call EDIS. This is something that we have started to discuss, but simultaneously we do not have euro area wide banks.
What are the impediments? What is it a political impediment?
I think that is legal. There are some very concrete domestic discretions that make very difficult to have cross-border consolidation, and I think it's something that the next Commission, for sure with the help of the ECB, will have to address.
One of the other things that's come up is money laundering problems, and,
yes.
and I was in Denmark recently, and learning a bit about Danske Bank, and this is not just a Danish bank. Seems to have been a sort of Nordic banking problem where it was sort of perceived as the soft underbelly through which bad actors, largely from Russia, were able to use these branches in the Baltics to launder money. One thing I hear from the banks there is, we were just too trusting. We don't understand how to deal with this stuff. If we had one single supervisor that looked at money laundering, we wouldn't have had this problem.
Well, we do not have, the ECB has not, mandate with respect to anti-money laundering. What we have is, we are totally open for cooperation and collaboration with the national anti-money laundering institutions. Simultaneously, the EBA, the European Banking Association, has been charged with, this task of coordination. But I fully agree with you, because the main asset of a bank is, reputation, and this kind of money laundering situations are affecting, are making more than a dent.
It's very weird that it all happened in the Nordic countries.
Yes. Well, it's something that, for sure, it's something that we will have to take care much more, closely in Europe over the next years, because, it's very difficult to understand why, they have, implemented this kind of flows with, certain parts of the world, and, I think that there is something that we have to correct and we will have to address.
When you talk to the bankers up there, they say, "Oh, our culture is just too trusting," and so which I think is, I'm not sure, that might be a little bit of a cop-out.
Sometimes you have to be a little bit more skeptical.
Yeah, no, I think that's right. So I'm going to open up to questions in a second. What your mandate will run out, your term will run out when the ECB, goes to its, next iteration. What will you do next? What do you want to do?
I don't know. I will be, I will be 66, so I don't know what I'm going to do.
Oh, you can run for president here then.
Yeah, perhaps, for sure that, it's an alternative.
You'll bring down the average age. Well, good. Let's. If anyone has questions, no filibustering, please. State your name, who you are, and your question. For Luis, raise your hand if you'd like the mic, please. Don't be shy. Where you go.
We have seen when the Federal Reserve increased interest rates, the fears of the market and the announcement of an Armageddon, and nothing happened. Isn't it the time for the European Central Bank to send a signal that the current level of interest rates is not sustainable, and do it gradually? Because I'm not convinced that increasing by 25 basis points is going to destroy the current situation, unless, of course, the main preoccupation is the risk of a sovereign crisis.
Well, first of all, what I have to say is that there is a very theoretical discussion about natural interest rate. Natural interest rate is the real rate that balances the supply and the demand for saving in an economy. And there is something that I think that is quite evident, perhaps because of demographics, because of technological change, the natural interest rate has been coming down, declining all over the world. And I think that this is something that we have to take into consideration, because it's something that I think that is relevant. Let's suppose that in the case of Europe, we that the natural interest rate is close to zero, the real rate. Let's suppose that we are able to beat our mandate of price stability, and that the inflation is between 1.5 and 2%. So the nominal interest rate will be in the area of 2%, 2.5. That's a totally different situation from what we had, 10 years ago, 15 years ago, 20 years ago. That's why, unconventional monetary instruments, are becoming more and more important.
Sorry, I forgot to. My name is Georges Jeu, Galileo Global Advisors. Aren't you worried about the impact of that policy on the remuneration of pensions, retirement, as the population is aging?
Well, I understand perfectly, the concerns that you have indicated, but perhaps, here, you have to look at different alternatives in terms of investments. You have to look at, equities, other kind of of, of assets. But again, what is important is that monetary policy, our mandate is price stability. Now the inflation rate in Europe is 1.5%. We are going to use all our instruments to try to meet our remit, our mandate. But what we have to look is at the evolution of the inflation rate and simultaneously the evolution of the global economy. And for sure that I know perfectly that there are complaints about the low level of interest rates. But again, look at the natural real rate and the inflation, and you will see that in that regard, the room for maneuver for central banks have been drastically reduced.
What would be what conditions would inspire, or you think would, under which conditions would the ECB consider buying equities? You sort of mentioned it. What would
we have never discussed. We have never discussed that possibility at all.
I mean, that's sort of like a
we have never discussed that
situation with the
even
red
as we finalized our QE program at the end of last year, but we have never discussed even the possibility of restarting or resuming QE.
Right.
So the question of equities is even farther away.
Trevor Honeycutt from Reuters. I just wanted to ask about the new TLTRO. Do you agree with some of your colleagues who have argued that the terms should be less generous than previous times?
Well, I think that it's not a question about generosity. I think that the new round of these long-term refinancing operations that we call in our jargon TLTRO 3. What we have tried is to maintain a smooth transmission of our monetary policy, and to avoid funding problems for the banks. No, we will define the conditions and the pricing of the new TLTRO in June, but I do not expect much discussion. I think that there is a big consensus among the different members of the Governing Council. We expect, that we are going to start in September. We'll have 6 operations in place, and the conditions will be very similar to the previous TLTROs in terms of the eligibility of, the loans, with a maximum of 30%. So, the only question that is, that we'll have to decide is about the pricing, but I think that is not going to be very, 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 very relevant. And it depends on what you understand by generosity. That's a very, evanescent concept.
Yes, Albert Golson from Cerulean Global Capital. Could you provide your perspectives on China's Belt and Road Initiative into Europe, specifically the Memorandum of Understanding, I believe, with the Italian government, as well as their keen interest, I believe, in a major German port?
Well, that goes clearly beyond, the mandate of a central bank. I cannot make any comments on that. Well, I think that it will be something that the next Commission and the next Council will have to deal with. But in terms of monetary policy, the influence is quite limited, as you can imagine.
I have another question here.
Another question, go ahead.
Charles Janjigian Trade. With the new populist motion or wave, is there a point where the international banks of the countries, let's say Poland, Italy, Hungary, are going to say just no to the Europe Central Bank, turn your back on them, fracture?
Well, I am a pro-European, and I think that the majority of the European population is pro-European, is pro-integration. Well, if you look at our recent history in Europe, has been, perfectly, our recent history in Europe. And so I think that, at the end of the day, for sure, that the European population that is mature, that is smart, will decide to continue with the process of political integration, economic integration, because this is the way forward. It's not going to be easy. It's not going to be easy. We are going to find difficulties on the way, for sure, in the way to more political and economic integration. But the question with the populist movements is that, you know, they believe that there are magic solutions for complex problems. And at the end of the day, mature societies and smart societies will learn that, you know, this is not the way forward, that there are not easy solutions for complex problems, and that, you know, sometimes if you start to look for scapegoats, well, you are not dealing with the problems that you have to deal. And, well, I am fully convinced that, you know, the European people, at the end of the day, will take, you know, the avenue of additional integration.
You said that monetary policy is not almighty. I agree, but at the same time, it looks to me the behavior of governments in Europe like a tragedy of the commons, where they look at the ECB to help them as an easy avenue rather than doing some in-house, very painful reforms. And to me, the probability of those reforms is very low vis-a-vis interventions, expectations from the ECB. So what's your view as what ECB, where's the line where ECB will say we cannot really entertain all these expectations because these politicians just don't want to do hard moves?
I think that, you know, that's a good point, you know, and that, you know, politicians will have to understand that monetary policy is part of the policy mix, but it's not everything. So that fiscal policy has a role to play, and you know, structural reforms, you know, in the supply side of the economies are also quite relevant. So we will have to tell politicians that you know, you cannot address all kinds of economic problems with monetary policy. You know, monetary policy is something that is relevant in order to maintain inflation low and to deliver, let's say, financial stability. But you know, real problems have to be, you know, real or supply side problems have to be addressed with other kind of instruments, not monetary policy.
When you look back at what Spain did after the crisis, and I mean, I think maybe you were explaining to me when in Madrid during that time, some of the idea of sort of internal devaluation or whatever. There were a lot of different economic, you know, explanations for what you guys did. But if there are one or two things that the experience of Spain would be worth passing on to, you know, Italy or other countries that are, or France that are trying, what would they be specifically, would you suggest?
Well, I do not want to brag about, you know, the Spanish economy. That's not my role now. But I think that there is something that I think that is relevant. To have, you know, a resilient banking industry is key. To have a well-functioning labor market is key. To eliminate, you know, and to get rid of entry barriers in product markets is key. That's something that I think that you have a lot of examples of how, you know, these kind of reforms foster and improve potential growth in the medium term. And these kind of problems cannot be addressed with monetary policy.
No, that's political. That's policy. You know, politics, well, not even fiscal. I mean, it's reform.
You know, it's fiscal policy. Is you know, putting forward, you know, reforms on the supply side of the economy.
Would you be able to do what you guys did? I mean, Spain. If the scenario we discussed comes true, where you have a hung parliament, similar to the one we just had, how does anything get done?
Well, I'm not going to speculate, you know, but I suppose that, you know, there is something that I think that is relevant, you know, in the Spanish case, is that the recent evolution and the recent performance of the Spanish economy has been very positive. So my impression is that no government would like to start to underperform when you have been an outperformer in the previous years. So to backtrack in terms of the reforms, my impression is that if you are smart, you will not implement that.
We have one question.
It's Andrea Fiano, Global Finance Magazine. Again, on the independence of the European Central Bank. You said the mandate is very clear and it came from the politicians. But couldn't the change of the political landscape in Europe, at least in theory, change the mandate or bring to a change of the mandate of what the ECB is supposed to do? Because given the political turmoil, I would like to at least discuss or have you tell your opinion on that.
Well, almost everything is possible in life, but I do not see it.
That would take a pretty big shift in the makeup of the European Parliament, wouldn't it?
Yes, for sure.
And
you know, modification of all the treaties. So, you know, a lot of referenda, and you know, and I think that it would be a big mistake, if you want my opinion.
you're here for the meeting of the the FSB, is that right? How is that body going? I mean, what is the level of sort of global interaction between the central banks? How has it shifted over, well, I mean, certainly under President Trump, but other nations that have focused a little bit more inwardly?
I think that the FSB was quite instrumental in, implementing the reforms, in the banking industry globally. After the crisis, in 2008, the FSB was mandated by the G20 to start to implement reforms with respect to too big to fail, with respect to derivatives, in some areas that are quite relevant. And now, I think that the FSB has delivered with the cooperation of the different central banks. Now, what we have to do is to start to look, to the, let's call it second generation reforms. What are second generation reforms? For instance, potential risks stemming from the asset management side. The volume of assets under management all over the world has grown dramatically. The level of leverage of many investment funds has been, increasing and rising quite a lot. If you look at, the portfolios of many investment funds, they have more illiquid and riskier assets than in the past, with higher leverage. And that could be, because, in terms of the banks, if you ask me, are the banks more resilient than they were 10 years ago? For sure that they are more resilient than they were 10 years ago. They have more capital, they have more liquidity, they are much more solvent. But, there are other risks, because there is something that I agree with you, that is, when you have a policy of very low interest rates, immediately, the search for yield comes to the fore. Perhaps, it's not as much in the case of the banks, because in the case of the banks, you have supervisors and you have very tight oversight. But in the case of the mutual fund industry, well, oversight is much lighter.
But so if we had another crisis in the banking system, would we still see that sort of cooperation? I mean, do you think it's strong, or would it devolve into
I think that it would be a mistake if we do not have that kind of cooperation. And I think that, I am totally in favor of the multilateral system of, economic cooperation that we have globally that affects, trade, taxation, finance. And I think that, because we are living in a global world. So if you start to apply, let's say, policies that favor fragmentation in these three areas, for sure that we are going to pay a price in terms of growth.
I think on that note, our time is up. Did you want me? I think we're good. Yeah, let's close it up. Everybody's got to go back to work, and not least Luis. Thank you very much, for doing this. Please give him a warm hand. Thank you. Thanks for doing it. That's good. Thank you.